Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we're getting an update from Talisker Resources. Talisker is traded on the TSX under the ticker TSK and on the OTCQX under the ticker TSKFF. And I'm joined today with the president and CEO of Talisker Resources, Terry Harbort. And Terry, it's great to have you on the show. Again, we just talked last month, but there's a lot on the go with the company, and I thought it'd be great to have you back on just to walk us through some of the development work the team has been engaged in and some of the success you've had in your underground development at the Mustang Mine. This is located at your Bralorne Gold Project in British Columbia. And maybe just before we get into the nitty gritty, just remind people of the Bralorne Gold Project, several prior producing mines. You're looking at these areas in between them that had not been mined historically and new areas to mine. And then just walk us through why you're starting off with the Mustang Mine.
Sure, Shad. Happy to talk about that. Bralorne itself, historic past producer. In fact, the largest historic producing gold mine in British Columbia and in Western Canada. Produced for about 40 years in three mines, the King, Bralorne, namesake, and the Pioneer Mine, and produced 4.2 million ounces at an incredible grade, 17.7 grams. So was really known as a very high grade continuous producer. Talisker, we acquired the project in 2019. We started drilling quite aggressively there, about 165,000 meters worth of drilling completed in about a 4-year period. Came up with our first resource base there, 1.7 million ounces. And then we've really fast-tracked the project into production here. So amended our permit, developed the mine plan, done our portal and decline development to get in there and get access into the veins. And now we're right at the pointy end of the picture where we're getting right to developing in our ore bodies, seeing our veins. Very exciting time to be.
Yeah, absolutely. And with the backdrop of where gold prices are, it's a great time to be a developer and near-term producer, Terry. Let's get into some of this development work, though. Just a couple weeks back, you put out news on March 26th talking about a development update and that you were at blasting of the diamond drill bay at the 1120 ramp and that you were working down in developments toward this 1105 level. This is in the Alhambra Vein. And then you just did another update just recently. And on April the 9th, you put out an update saying that you've made it there. You've now started the lateral development on the Alhambra Vein. This is the mineralized material, the 1105 level. And so you're there at the pay dirt level. You've made it through the waste store. Talk to us about what a significant this milestone is for your operations team.
Oh yeah, look, and I have to give a lot of credit to our operational team there, led by Bill. Things have been going very smoothly. They've been taking a very measured and metered approach, and our mining contractors have been doing a great job up to this stage. So we've been simultaneously doing access development or lateral development on 4 levels up until now. So they're the 1060, the 1075, the 1105, and the 1120. So working on multiple fronts, and the team's looking at starting development on a 5th level. So if your listeners can imagine that, hold your fingers up. We've basically got 5 fingers developing at this stage along the Alhambra Vein. So that gives us a lot of working faces to work for. And on the 1105, we're now transitioning from that waste development into our ore development on the lateral ore. So we're doing a mining method called long hole, and in long hole you do your development or your access level along the vein, and then you stope up from that development and muck out the ore. So we're very happy to be in that, a little bit ahead of schedule. Always good to be ahead of schedule. When we put the press release out, we're about 2.2 meters on. We've since advanced from that, and we had a beautiful face that came out. The vein was smattered with visible gold all over it. We put out a social media video showing that. I encourage anyone listening to go and have a look at some of our channels, to have a look at that video and see how much gold there was in that initial phase. So really an excellent start to our transition from waste development onto in-vein development.
Yeah, always nice to see, Terry, a bunch of visible gold in the face that you're opening up. That's a good sign. Now, could you talk to us a little bit about the anticipated grade that you'll be mining here and about what is possible for moving this ore into a production scenario?
Sure thing, Shad. Our anticipated grade here from a block model for the first year or so of production, it's quite high. It'll be averaging 14 grams per ton, and that's a fully diluted grade. So we've diluted that with the mining width. So that's the actual grade that we expect to come out. Our longer term mine plan over the next 5 years, which is on the Alhambra Vein, but also on a couple of other veins, the BK and a few others. It's going to average about 11 grams per ton, fully diluted. So quite high material, quite high margin material. Our process here, until we're in our production veins, we've got about another month to 2 month worth of development, and that's developing our access so we can get our equipment in. That'll be developing along the veins. So there will be some material that we'll look to truck and process in that lateral development. But it's really once we start getting up into the stope. So that's when we mine from the accesses upwards. We mine that quite a lot narrower, about 1.8 meters. And that's when we have our real ore or our real production material. So on our current schedule, we're looking sort of towards the end of May, early June, that we'll see that material mined out and moving. So basically right now, we're very close to it.
Yeah, summertime mining here for gold. And just remind people that you don't have to do an expensive mill build and or anything like that or test the commissioning because you are trucking this ore over to other mills that have spare capacity.
Yes, that's right. One of the big advantages that we have here in the interior, in south central British Columbia, it's the heart of mining here in Western Canada. Some really big operational mines, many of them that are under capacity, so they're hungry and looking for more material. And it's also the location of BC's very first permitted multi-source toll mill, the Craigmont facility owned by Nicola Mining, who we sent a stockpile to last year and we'll be sending some material to this year as well.
Well, and you're going to have an incremental ramp up as far as the amount as you open up more stopes and as you get more development in place. But talk to us about what you think the timeline is to move it from something like 100 tons per day to 250 tons per day to 500. What's that timeline look like?
So we're starting off at about 100 tons per day at the moment, Chad. It varies a bit. Some days are a bit more, some days a bit less, but across the line, it's about 100. We move up there in about the middle of the year to about 175 tons per day, and we'll be probably hitting about 200 tons a day by the end of the year, moving through to 250 the following year, 500, and then 750 the next year on from that. And at the Mustang area where we are, that's sort of what we think the magic number is, about 750 tons per day. And we'll be looking at developing additional portals then in other areas. We've got some work to do on mine scheduling and resource definition, but we'll likely open another portal in what we call the BP gap, which sits between Bralorne and Pioneer, so the two old mines where a lot of our resource sits. And effectively what we'd like to do there is evaluate the potential to double that production rate to 1,500 tonnes per day or even further up to 2,000 tonnes per day. And we think that's a really good place to be taking the Bralorne mine complex to. There's certainly lots of gold around the place. It's all about scheduling and planning and doing the development to access and extract that high-grade ore.
Yeah, it's going to be an interesting process to see how you start moving it from different areas over time. So, starting in the Mustang Mine area, which is kind of between the historic King and Bralorne mines, but then also that BP area, as you're dubbing it, between Bralorne and Pioneer, another area that you could put some portals down into and start having production from down the road. I guess another question people may be interested in hearing about, Terry, is how insulated are you from metals prices pulling back if we were to see a correction in the precious metals? Obviously, they're at record highs right now. So, how insulated are you on the downside? And what would it look like if we just see gold keep ripping higher? So, give us both sides, the defensive and the offensive outlook.
Sure thing, Shay. Look, I'm a big believer in the adage, grade is king. And certainly high grade is something that we've got a lot of here at Bralorne. Our resource grade and indicated is 8.9 grams. I think only Kena with West Dome has higher grade in Canada than us. Our first 5 years, we're going to be mining 11 grams per tonne, fully diluted. So actually going to be the highest grade gold producer here in Canada. So we have a lot of margin there. Our original economics, when we decided to go into production, were around 1885. So things have changed a great deal since then, us rocketing up to 1105. But really what we see is our all-in sustaining costs we predict here are around the 1,500 Canadian. So we're sort of in that 4,300 Canadian. So we have sort of $3,000 worth of play that the gold price can come down before we start to get sweaty palms. So a lot of range there really on the downside, and it all comes about the grade. Having high grade gives you a lot of margin, a lot of flexibility, and probably one of the reasons why Bralorne was in production for so long, for 40 years in the old days, because of that consistent high grade that the project has. If the gold price keeps going up, well, it just gets better and better for us, and it allows us to bring a lot of our development online a lot sooner. Certainly, our plan at the moment is to self-fund ourselves, so get into production, use our cash flow to develop and grow the mine. But with gold price rocketing up and capital available, we can certainly look at, well, how do we make this bigger, better, and faster? So how do we bring more development online, bring more production online, and really try and reach a maximal production rate, which at this stage I sort of see in that 1,500 to 2,000 tonne a day, maybe tapping us out at 200 to 250,000 ounces per year, which would be an excellent position to be in, particularly with gold sustaining above 3,000 or even going to 3.5. It'd be an excellent spot for us to be in.
Yeah, it's going to be nice to see what the plan could be to expedite that, to get it up to that 1,500 to 2,000 tons per day over the fullness of time. But you got to baby steps here. Each incremental increase that you have in the throughput and the amount of ore that you're trucking over to these mills is going to give you that stair-step approach higher. Now, what other CapEx needs to be spent on development? What other sustaining capital will you need to keep this operation going, not just throughout the 2025, but looking into 2026 as well?
So at this stage, with our current plan, our systematic scale up, we are fully funded. So it's a longer road that we need to take, self-funding. However, it removes any requirement from additional capital. And really, we've been driven to that by market conditions. There has been no capital available or limited capital available over the last 2.5 years. And we've been very fortunate to be able to sell some royalties and do some other deals to be able to get our capital to get up to production. With available capital, well, things change a great deal. And certainly what we'd look at with additional capital is bringing development between Mustang and Bralorne West forward. And there's about 560 metres worth of development there. This year, without extra capital, we can sort of do 100 metres of that development out of that 560. With additional capital, well, we'd get right into that. We'd rip across there. By the time we get to Bralorne West, there are 5 parallel high-grade structures, and really we'd see our ramp up come online much quicker, de-risk the project very quickly with a lot more gold production a lot sooner. So really that's what we'd look at if we didn't have any constraints, really bringing this project online faster, bigger, better, faster.
All right. So yeah, if you get the access to a good cost of capital, you'd move that area between Mustang and Bralorne West even further up the food chain and at a faster pace. So definitely something we can watch out for as these markets keep developing. I guess because investors like to know what are the next catalysts, Terry, give us a rundown of what key news is on tap over the next few months or quarters.
Well, we certainly have some major news coming online, and the first one of these will be increasing our ore-based lateral development. So that's developing along the veins. We'll likely start trupping some of our ore and starting to build up a stockpile for processing. The next one, of course, then is processing that ore and then getting paid for it, which is the bit that I love the most. So they're the major catalysts that are coming on as we're turning this from a development story into a producing story. For those of you who like drill hole results, we'll also be having some drill hole results. We're doing quite a small program this year compared to what we've done I think it's about 1,400 meters of drilling, about 600 of that from underground. That's basically just to assist with some resource conversion and grade control. We're likely going to hit some very good results coming out there as well for those of you who'd like to see nice high grade drill results. So quite a lot of news here in the next 3 to 4 months. It'll be a fairly constant flow. On the side of those things, we're also be advancing soon to stage 2 of our ore sorting study. I think we discussed our ore sorting study last time. The results were very good. We're looking at accelerating that program. It can have quite large impacts on our economics, both on the trucking and milling side, but also on our efficiencies in milling. So encourage everyone to watch this space. It was a very good initial study that we did, and we're eager to follow that up because it can really help our pathway going forward.
All right. Well, I think we'll wrap it up there for today, Terry. But yeah, a lot of news on tap from Talisker Resources. So for those listening in, if you want to follow along with all the news or just revisit some of the news we've discussed here today, definitely click on the link below in the show notes. It takes you straight over to the Talisker Resources website to their news section where you can sign up for updates or just follow along with more news as it drops. Lots going on between development, eventual processing. I do like the part about getting paid on that as well. And then obviously some drilling and exploration news on tap, as well as more information on the ore sorting. So a lot going on with Talisker Resources. We'll keep following along with it here at the KE Report. And as always, Terry, looking forward to our next conversation.
Thanks very much, Ed. See you next time.